Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're jumping down into the world of both Bitcoin and Ethereum, taking a look at what's been going on most recently and what we might expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Now, if you have not yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? You'll also find links to our Patreon services down in the description below. We offer a lot more for our Patreon members via Discord, everything from trading, project reviews, AMAs, technical analysis requests, more TA in general, and a whole host more. So why not check it out if that sounds interesting to you guys? And of course, you'll also find links to the new Cheeky podcast and a whole host of additional offers and kind of promotions in the description below. So why not check those out as well? So that might be something of interest to you. Okay, let's get into this though. Let's get started. What we're going to do is we're going to jump on down and we're going to take a look at some Glassnode data to start with. So here we have Glassnode data. This Glassnode data basically is run from the Glassnode Studio via API into Power BI so that I can actually cut the information slightly differently and make a little bit more sense over what is going on, and of course see more information all in one screen. So here we can see that the inflows for 2022 are 7.34 million, with outflows being 7.62 million. Okay, so we can see there's a reasonable amount of accumulation that's happened in 2022, but the gap is closing down ever so slightly. Over here we have the Bitcoin on exchanges, so over a 375-day range, we can see that there's a macro direction here that Bitcoin is coming off of the exchanges, it's not staying on the exchanges. And obviously this will be fueled by the bear market and the kind of things that happen during a bear market, as you also be familiar with by now. Over this side, we have the net difference between the inflows and the outflows. However, each bar is a 30-day average. This gives us just a graphic that understands whether or not over a large period of time, we actually are seeing more accumulation or more kind of, I guess, the exchanges being loaded up with Bitcoin. Now over here, most recently, we can see a relatively flat line. This is an interesting pieces of information which we'll get to later in the video, but basically this is indicating that there isn't actually too much main accumulation of Bitcoin coming off of the exchanges, as in this is the net difference between the inflows and the outflows, and actually they're pretty much being matched one for one. Okay, so this is an interesting kind of tell. It's a little bit of accumulation, as in a little bit more is coming off, but for the most part, it's being pretty much level pegging. Now down here we have the hodl waves. The hodl waves are a great way of actually indicating whether or not Bitcoin that has been static in a wallet for a large period of time has all of a sudden moved. So down here, for example, we have 10 years or more, we have 7 to 10 years, 5 to 7 years, 3 to 5 years, 2 to 3 years, and 1 to 2 years. These are the brackets that I like to keep an eye on, okay? So how long has Bitcoin been in a wallet for? So if it's been in a wallet for more than 10 years, we can argue that this Bitcoin here is lost, the keys might be lost, and you can't get access to it anymore. This is 13.05% of the circulating supply, so a pretty large chunk. Over this side, we have the 7 to 10. There is basically a slight increase here. We're going from 6.45 to 6.46% in the last 24 hours, which basically means that there's actually a bit of aging going on here. And we're moving up the brackets ever so slightly. The 5 to 7 years, there's no change, but obviously we have a slight increase with the 7 to 10s. Over this side on the 3 to 5 year olds, we basically have the 14.2 to 14.2, no change. Over the 2 to 3 years, we have a slight increase going from 6.41 to 6.42. Okay, so a slight increase here, meaning that we have a slight decrease in the 1 to 2 years as they move from 20.7% to 20.70, so 20.77 to 20.7. Okay, 0. So pretty, interesting. We're basically long-term hodlers remain long-term hodlers, diamond hands not being shaken out and haven't become paper hands. Now, obviously, I like to keep an eye on the last 24 hours as well, see whether we've got an increase in activity, and we do. We're moving from 1.15% to 1.19%. Okay, so from a hodl wave perspective, we've kind of got pretty good solid long-term holders that aren't being shaken out of the space, and we've got little activity really across the spectrum. Okay, let's move on into the next chart. Now, as I said, inflows and outflows. We can see from this graphic over here, from a 30-day average on a net difference, that basically Bitcoin is having the inflows and the outflows being pretty much level pegging and being matched. And here we can see this. We have the inflows and the outflows. So basically the outflows are our green line with the inflows being the red line. and you can see how they're pretty much being matched. There's a little bit of fluctuation to it. Over here, for example, we had slightly more outflows, and yesterday we can see that we had more inflows than we had outflows. Okay, so 28,000 in and only 25,000 out. But for the most part, it's pretty level pegging. There isn't anything major to kind of report within this last little kind of period here. But you kind of get the idea. We've been kind of seeing a bit of a transfer between participants per se, and transfer is coming in and coming out at pretty much a level pegging, which brings us over into the next chart. The next chart has actually got 3 graphs on here on this particular page. We've got basically Bitcoin wallet addresses, and these are then broken down into how much Bitcoin they hold. We've got 10 Bitcoin or more per wallet, 100 Bitcoin or more per wallet, and 1,000 Bitcoin more per wallet. Basically, whales, sharks, dolphins. Okay, so if we take a look at the whales, we can see that these guys accumulated at the end of February, and then they spiked all the way up here, and basically from March they start to really sell off aggressively and have been de-risking ever since. Now the interesting tell here is that basically at the point of spiking up here, well, just before we hit $32,000, and then up the top end was when we hit the high of $48,000, and we start to see the selling pressure occur. Now obviously if they continue to sell that the way they are selling technically at a loss, lower than when they actually purchased. Now that's an interesting piece of information because it does mean that either one of two things are happening here. One, the whales are panic selling and they're coming out at a loss, or the whales know something that we do not and are preparing for deeper corrective moves, and they're looking to accumulate at a later stage. And being the fact that they are whales and they're whales for a reason, I believe it's the latter. Moving on to the sharks here, we can see that these guys have been aggressively de-risking. They did spike up a little bit in March, went sideways and have pulled back a little bit as well recently. Not as aggressive as the whales, but pretty aggressive nonetheless. Then of course we come over to the dolphins, and the dolphins here are basically your high net worth individuals. They've been aggressively accumulating and have been since the end of February. They haven't actually slowed down at all, and since the whales have been ditching Bitcoin, these guys have been accumulating. And that's one of the things we have to understand about whales, and arguably the sharks, not so much, but a little bit, I guess, is how they operate in the space. Basically, a whale cannot just go ahead and do a market order, a limit order, or anything like that. They would move the price far too much, with either taking a huge chunk of supply out of circulating, out of circulation, or putting a load of supply into circulation, which would affect the price. So basically, what they have to do is they have to sell into liquidity. Okay, so that liquidity can be generated in many different ways. The first one would be through liquidation events in using leverage. So let's hypothetically say you short the market, there's a pocket of liquidity that gets created up higher in the price chart, and if the price was to hit that point, they could sell their Bitcoin into that liquidity as you get liquidated out of your short position, because you have to buy Bitcoin at a more expensive rate. Okay, one of the reasons that leverage is high risk, and not for newbies. Obviously if you do it the other way around and you long the market, the price could gravitate down, and they could of course sell their Bitcoin or buy the Bitcoin from you at cheaper rates because you went long on the market, for example. Okay, so basically that's one way they can do it. The other way is through market makers and stop losses and things like that. And of course, the other way would be for providing some kind of fake pump in the market, get some FOMO going, and basically the retail then provide the exit liquidity for the whales, something that we've seen going on most recently. Okay, so here we can see that the dolphins have basically been accumulating, and they've basically been paying for the whales to exit the space. Or if you think about it differently, the whales sold the Bitcoin or their Bitcoin to the dolphins directly, as is indicated within our relatively flat inflows and outflows, and from our 30-day average. It's not coming off of the exchanges, it's basically just being transferred between participants, which then brings us over into the shrimps. The shrimps are basically your one Bitcoiners, and there was a recent article which was great. It's great to have a lot more people. And if we take a look at this, they're still accumulating right now. 894,000 people or addresses in terms of wallet addresses have become one Bitcoiners, right? They own at least one Bitcoin. Which is great. However, we have to acknowledge that basically the whales came out of Bitcoin and we've accumulated as in terms of retail investors. Okay, so we again, as retail investors or high net worth individuals, have provided the exit liquidity for the whales. So the whales are coming out of their Bitcoin, and it's going over to the dolphins and the shrimps. Okay, so these are important pieces of information that we should understand and we should acknowledge, because it has an impact on what is actually going on in the space. We have a couple of things that we want to kind of, articulate, or we should try to understand in a deeper way. That is that whales are coming out of their Bitcoin positions, and we'd have to ask ourselves why. It's not something that I can answer for you. It's whatever you're going to choose to believe. I present you with the information as I see it right here, and that is that they are coming out of their positions. Right now, you've got to make a decision as to why you think that is. You've got a couple of options. One, you think they're just stupid and they're just prematurely selling their Bitcoin, as per some of the comments and some of the videos and streams that we've been doing, and that how stupid are they for selling so early, versus maybe they know something that we just simply don't. Maybe they have that foresight to be able to see that actually this market is going down, or maybe they're even dragging the market down deliberately, trying to push it down into those new lower lows. I can't answer that for you. No one really truly knows what the motive is behind them aggressively de-risking. You get people like Tesla, for example, saying that they need to increase their cash position, for various different reasons, which, during a point of super high inflation, 40-year high inflation, it makes sense to stack up your cash positions. Yeah, that it really does. You should definitely have a lot of cash right now. Yeah. Anyway, moving on. We have to understand, why we would want to do such a thing. Okay, it would sell the Bitcoin, hold on to Doge. Now, I'm not going to talk about Elon anymore, but basically you get the idea, right? They're coming out of their positions for a reason. We don't know what it is, but we can speculate as to why, okay? You might have many kind of loose reasonings behind why they're doing it, but essentially what they are doing is they are coming out, okay? And we should acknowledge that they're out of their positions. We shouldn't just jump in without really taking a step back to think logically about why they might be wanting to exit out of their positions of Bitcoin. Okay, so knowing that what's going on with kind of all the data that sits in the background of Glassnode and all of that kind of stuff, let's now jump down into the price charts for Bitcoin and take a look at what's been going on recently. And I'll turn that one off. There we go. Okay, so Bitcoin paired up with USDT, and on the hourly chart, as you can kind of see, there was a suggestion from one of our members, so I've made some adjustments to the charts here so we can see the watermark in there, and I've made the numbers bigger. Let me know in the comments below if that's still legible or want me to make any more changes. I'm happy to do so. But basically here we have the price action chart, right? And we had this area, this double top kind of coming in at the 24,000. And we're talking about this high point of being about $26,500 being the kind of upper level. Now that is that dream has kind of come to a bit of a close. It's still possible that we can push up higher, of course. Yeah, it's also possible we pull back a little bit further as well. So there's interesting kind of structures going on here, right? So first of all, we've got a couple of nested positions and lots of different traps potentially being set up here. So the first one that we want to acknowledge is that we do have this really strong wave up here, and this is all corrective. So unless we were to come down lower than 710, it's always possible that we still bounce up higher. Okay, but obviously the lower that we go, the further away from $26,500 we're going to get. Okay, now obviously as I zoom on into this recent move to the downside, it's actually a little bit clearer on Ethereum than it is on Bitcoin here. If we were to take this low point and this high point, move it over to here, we can see that this point triggers a fourth wave, third wave high, and then obviously the fourth wave here, the fifth wave down. So it's actually clearer on Ethereum than it is on Bitcoin, but this here is a 1, 2, 3, 4, 5 structure. Okay, now if we actually go ahead and measure the third wave to the fourth wave, you can see that we do meet our minimum requirements of our fifth wave. Now this could be multiple different things. Okay, so when we have 5-wave structures, as I've said many times before, these can mean a couple of different things. One, we have a zigzag pattern. A zigzag is basically just 5 waves down in this particular, or up, it doesn't really matter which way, a 3-wave counter to that, okay, and then an additional 5-wave move to the downside. Normally a zigzag pattern is known as an A, B, and C. Okay, so that's one corrective structure that we could be witnessing, and although we have a 5-wave structure, which is normally a trend, it doesn't necessarily mean it's a big macro trend pattern, okay? So knowing that, it means that we are probably going to be pulling back down even lower, okay? So our B wave might not be done. And if our B wave does not cross this 20,706, then it is still possible that we bounce up higher afterwards, okay? So we're expecting a couple of things. Now, B waves are unpredictable, okay? So a B wave over here, for example, this B wave here is unpredictable. It could be all the way up here, or it could be all the way down here, right? And then do that. It's unpredictable in the way that it works. We'd assume about 50% movement, but, you know, it's hard to be more accurate than that. So we're looking for this kind of move up next, okay? Now we take a look at the stochastic RSI on the hourly. It's overbought. On the 4 hourly, it's oversold. On the 8 hour, oversold. On the daily, coming down nicely. The weekly is going up still, so quite a way to go there. So essentially, yeah, that's kind of what we're looking at here. We've got potentially a little bit more volatility to experience right where we are. I imagine that the CPI numbers today are probably going to be a catalyst for upward directional move to take us back up into this little range here. But, you know, I don't think there's a lot of confidence in the market. And obviously, we've been talking about movements and downwards in the market for quite some time. You know, I'm still of that opinion. And as many people will know with the altcoins that I'm predicting into new lower lows, and a lot of people are saying, speculating, and rightfully so, that, you know, Bitcoin might go down into new lower lows. Now, I don't have the data from an Elliott wave theory point of view to say that we're definitely going down into new lower lows, but I am of the opinion that we are likely to go, and there's a high probability that we're likely to go down into new lower lows. But I haven't got any wave structures here to be more accurate on that. It's just my personal opinions based on the rest of the market, right? We have things like Ethereum needs to go down into new lower lows, and we have pretty much majority of most other altcoins looking for new lower lows that can be mapped out using Elliott wave theory. So it'll be foolish to think that, you know, that maybe Ethereum is going to move down 50%, but Bitcoin doesn't go down into new lower lows, for example. So there's interesting kind of stuff to kind of think about within the structures here. But right now, I'm expecting a small push up today, probably then followed by another 5-wave drop as a minimum structure. And if we are starting a new trend to the downside, then all of this could be a much deeper move than just the ABC structure, where we end up with a much bigger kind of macro structure moving us down. And if it starts off with 5 waves like that, we would still expect our relief bounces to happen, okay? And then, of course, you know, potentially then really going down into new lower lows. And we all are aware that there's a macro positions for Bitcoin that are concerning, which would of course be 14,600. To hit that level, then we're talking $10,000 regardless, and we can map that out with Elliott wave theory at that particular point. So yeah, we want to be quite cautious that if you hit 14,600, then this space and many altcoins are going to absolutely get destroyed, and you know, we want to be on the right side of that, okay? So essentially that's kind of where Bitcoin sits right now in this micro time frame. There isn't too much more to really note about it. We know the macro positions, we know the kind of the micro positions here, and the trends and the structures that are kind of going on, i.e. there is no trend upwards, there is no trend to the downside other than what's already been completed over here on the left hand side. So right now what we're looking for here is to see whether or not we're going to start some kind of new trend to the downside, whether or not we're just going to be more corrective and just trade sideways for a while, and not go down into low lows. These are the things that will come out in due course, and there's going to be some major catalysts in the space, whether that's going to be the China housing crisis or something totally different. We'll soon find out as these next few weeks and months kind of progress on through, and as we kind of usher in the kind of late stages of 2022. Okay, so that is Bitcoin. I'll keep it nice and brief today. I've got a lot on, hence we're not live. We're just on a pre-record. So let's go ahead and jump on over now into Ethereum. Now, Ethereum is doing some pretty cool stuff, as kind of we were talking about yesterday afternoon in the altcoin video stream. And actually, you know, we hit pretty much the expectations. So let's go ahead and take a look at this, right? So as we were talking about yesterday afternoon, right, we were mapping out, after seeing this drop to the downside here, we mapped out a 4th wave high point at $1,716. We moved up to $1,716. Then of course we mapped down this low point here. I said it was going to be ranging between the 1.236 and the 1.618, basically 1,638 and 1,656. From here we can see that we actually moved down to $1,656. So we basically nailed this upward move and we nailed this downward move, and we are now talking about moving up into a typical wave 2 area. Okay, so right now we've done everything as you would expect them to for a very typical 5-wave structure. Okay, and a typical 5-wave structure like this could still be a typical wave 1 move where I'm looking aggressively at a wave 2 next, okay? Now this wave 2 would be approximately somewhere between 1,726 and 1,774, okay? That would be a 50 to 88% retracement of our 5-wave structure, okay? And however, I did take it from, I think, the lower end, so let's just do some quick sense checks on our positioning here. We're going to grab it from here, and we're going to adjust this just a little bit to make it fit better with the current levels of pricing. Okay, so it makes it a little bit worse. 1,735 to 1,778. That there would be a typical wave 2. So if we have a 3-wave move structure, and it takes us up into this range here for wave 2, then actually our typical kind of wave 2 retracement zones, then I would say that this is not just a zigzag pattern. It has a higher probability of becoming something more sinister as we then start to look and usher into those lower ranges. Now, the key to this will be taking a look at that stochastic. On the hourly chart, we can move on down a little bit here. I'm not expecting too much though. On the 4 hour for this one, we are oversold, so we have a nice kind of momentum to the upside here. On the 8 hour, we're oversold and we can move up. On the daily, we can obviously moving down still. We can move up afterwards. And the weekly, we're up in the overbought area. So I'll get rid of that for a second. We have enough momentum to take us up into this wave 2 and potentially even take us up into a double top kind of scenario and all of those kind of things. So that isn't really the concern. The concern really comes on the daily chart, whether or not the daily is going to progress up into an overbought area during this wave 2, which I think would be very much required if we want to see a really deep wave 3. Obviously, the weekly is supporting a real big crash in the market, but the daily isn't really giving us the kind of momentum that I would want to see to the downside. Of course, there's a lot of reasons on the larger time frames, such as the monthly, etc., to kind of see this one kind of calm down. But the daily, you know, is progressing a little bit too fast to the downside during this particular moment. So I would look for this move upwards to be slow if possible. I don't want to see this kind of rapid move in Ethereum. I want to see this kind of grind out maybe over a week or so to the upside, maybe a little bit more than that. Just kind of work our way up into this kind of wave 2 area gradually, and then that basically should allow us to move our stochastic on a larger time frame of the daily chart up into the overbought area, ready for this bigger drop to the downside at a later stage. Now, the reason for this, obviously, if anyone's been caught out, which hopefully you shouldn't have been, you should have been paying attention from the early stages. Basically, we're in a wave 4 structure, right? And the wave 4 going up as high as it has done means that we have to move on down approximately between $563 and $743. And the invalidation, or something that would basically prevent this 5th wave high, is set at $2,159 right up here. So basically, in order to prevent ourselves going down, the price would have to have moved up higher than 2,159. But since that hasn't happened, and since we have that 5-wave structure drop, typically a typical kind of 5-wave structure as well, moving on down, we might actually be starting our journey to this downside. So, you know, caution to this. It's not the first time we said it looks like we're moving on down. We could just have a simple corrective move and then move on up a little bit more, but this is becoming very choppy right here at the top. So we would be looking at, if anything, just a slight higher move, but you know, there's no guarantee of it. We could complete here at the top and still move on down nicely. So at 1,677, again, I would estimate that the CPI numbers will be deemed positive from the market. A lot of it was probably priced in yesterday. We move on up into the typical wave 2, and then something happens that brings us down. Who knows what that is, but essentially this is what happens within the markets. They're incredibly fragile right now and on the cusp of a much deeper 5-wave move. If we're lucky, we end up with just an ABZ zigzag, and basically we just finish down here and we can kind of move on with life. But essentially that's kind of Ethereum right now. Ultimately, I'm for both Bitcoin and Ethereum, I'm seeing upward directional moves probably today based on the CPI numbers. I would say that a lot of it was probably priced in yesterday afternoon with some selling pressure ahead of today. And then basically we move on up. Now, I'm not looking for this to go up higher than the origin levels of what we were yesterday, high points or anything like that. We were just looking for a nice 3-wave structure upwards that takes us back up into the overbought area on something like the hourly, the 4-hourly. And if we're lucky and we can drag this out for long enough, take up the 8-hour and the daily back up into the overbought areas, ready for the next big catalyst to the downside. So I'm going to leave this video right there. If you have found it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.